So, here's the thing, there's this fundamental technical disconnect going on. HEDERA hash graph actually operates on a completely different architecture than those traditional blockchains most people talk about. It's a directed acyclic graph, or DAG technology, that's really designed for enterprise-grade throughput and efficiency. And, just look at their partnership roster. It pretty much reads like a Fortune 500 directory. You've got Google Cloud, Nvidia for AI verification, and Intel for infrastructure. These aren't just your typical marketing partnerships either. These are real technical integrations for, actual real-world applications. Yet, HBAR is trading at 17.35 cents, down 43.46% year-to-date. That's not just a minor correction, that's a structural downtrend that's honestly persisted despite all the fundamental progress we've seen. The market cap is sitting at $7.39 billion, which puts it at rank number 19 overall. So this isn't some obscure altcoin we're dealing with. This is an established layer 1 with, legitimate enterprise adoption. The recent performance data, well, it paints an even grimmer picture. 60-day performance is down 24.08%, 90-day down 32.06%, and 30-day down 22.99%. The selling pressure here has been honestly relentless, and it's accelerating. In just the last 7 days, it's dropped 14.10%, and the 24-hour change shows another 6.12% decline. This is, really what sustained distribution looks like. Consistent selling across multiple time frames without any meaningful relief rallies. The current price is 70.85% below its all-time high of 57 cents, but still 1,559% above its all-time low of just over 1 cent. That context really matters because, it tells us HBAR has room to fall further, historically, but also that we're not looking at a pump and dump token that just went parabolic and crashed. The 24-hour trading volume sits around $510 million with a turnover rate of 0.0722, indicating consistent activity. This isn't low liquidity territory. There's genuine participation, which means the selling is intentional, not just a lack of interest. So here's the tension. Fundamentals suggest long-term viability through enterprise adoption and DAG technology superiority, but price action reflects complete market disinterest or maybe even active distribution. That divergence creates either opportunity or a value trap. The chart will tell us which. The 30-minute chart breakdown. Let's get tactical with the 30-minute HBAR to USDT chart, because this is where timing precision enters the equation. The price has been trading consistently below the 200-period EMA, which is textbook bearish structure. When longer-term moving averages control price action from above, rallies get rejected and downtrends persist. Currently, we're seeing a bearish EMA crossover configuration. The 20 EMA is below the 50 EMA, which is below the 100 EMA, which is below the 200 EMA. This is called a death stack in technical analysis. Every shorter time frame trend is weaker than longer time frames. That's maximum bearish alignment. However, and this is critical, price is attempting to break above the 20, 50, and 100 EMAs right now. If that break sustains with volume confirmation, it signals short-term bulls are gaining control and could initiate a relief rally. But the 200 EMA, at approximately 17 cents, 0.1799, represents major resistance. That's the level where previous rally attempts died, and it's where sellers are likely positioned. Volume analysis reveals important patterns. There was a massive volume spike on November 3rd corresponding with a sharp price drop. Yeah, that's capitulation or large holder distribution. Since then, volume has been moderate, suggesting we're in a consolidation or accumulation phase after that selling climax. Lower volume during price stability often precedes volatility expansion in either direction. The RSI currently sits at 60.57, which is neutral to slightly overbought territory. More importantly, RSI just crossed above its signal line and is trending upward. That's a bullish divergence signal suggesting momentum is shifting, at least temporarily. However, RSI needs to maintain above 50 and ideally push towards 70 to confirm sustained buying pressure. If RSI reverses from current levels, it becomes a failed breakout signal. Price action shows a clear cluster of resistance between 0.174 and 0.179, perfectly aligning with that 200 EMA. Every test of this zone has been rejected over recent sessions. For bulls to establish control, we need a decisive close above 0.1799 with increasing volume, not just a wick above and rejection. Before we break down the exact support levels and trading strategy, and trust me, this is where risk management becomes critical, hit that like button right now if this chart analysis is giving you clarity you won't find anywhere else. Seriously, most crypto channels ignore technical structure and just hype partnerships. We're doing actual analysis here. And if you're not subscribed yet, subscribe and turn notifications on so you catch the follow-up when this 200 EMA resistance either breaks or rejects price again. Now, let's talk strategy. Support levels and risk zones. Support structure is equally critical for understanding risk parameters. The immediate support sits at 17 cents, which has provided a temporary floor during recent selling. That's where buyers have defended aggressively enough to prevent further collapse, so far. Below 17 cents, the next significant support level is 16.5 cents. If price breaks below 17 cents with volume, that becomes the magnet for the next leg down. And if 0.1650 fails, we're looking at potentially retesting lower ranges towards 0.15 or even beyond that. That's where stop losses need to be placed for anyone attempting long positions from current levels. The risk-reward equation is, pretty straightforward from 0.1735, resistance is at 0.1799, which is roughly 3.7% upside to test resistance. Meanwhile, support at 0.17 represents about 2% downside risk, and 0.1650 represents a 4.9% downside. So, that means the immediate risk-reward for long entries is actually unfavorable, unless you're really confident about the 200 EMA breakout. For traders considering long positions, the strategic entry isn't here at 0.1735, it's either on a confirmed break and hold above 0.1799, or on a dip back to 0.17 support with bullish reversal signals. Right now, the current price is just stuck in no man's land between resistance and support, which is honestly where most traders get chopped up by volatility. For short positions, the setup looks more favorable technically, but that RSI signal line cross creates some short-term risk. If you're bearish, you'd want to see price reject the 200 EMA decisively, then short the failure with targets toward 17 cents, and potentially 16.5 cents. But shorting before that rejection confirmation is really premature, given the current RSI structure. The trading playbook. Let's get specific about actionable strategies, because honestly, vague analysis without execution parameters is pretty much worthless. Here's the playbook based on the current structure. Scenario 1. YTD Performance. Bullish breakout play. Entry is a confirmed close above 17.99 cents on the 30-minute chart, with volume exceeding the recent average. Stop loss goes below 17.5 cents, since that's our failed breakout invalidation. Target 1 is 18.5 cents, which is the previous resistance zone. Target 2 is 19 cents or higher, if momentum sustains. The risk-reward is approximately 1 to 2 on target 1. Alright, let's talk about the bearish rejection play. The entry here is when the price rejects 0.1799 with a bearish candle confirmation, and the RSI is turning down from above 60 levels. The stop loss should be set just above 0.182. which is basically where a breakout would be invalidated. For your targets, the first is 0.17, which is a support retest, and the second is 0.1650 for a deeper support. The risk-reward ratio is approximately 1 to 1.5 on that first target. Now, moving on to the support bounce play. The entry for this setup happens when the price dips to 0.17 and you see a bullish reversal pattern like a hammer or an engulfing candle, plus the RSI is oversold. Your stop loss goes just below 0.1680, which is where the support break would be invalidated. For targets, the first is 0.1799, taking you back up to resistance, and the second is a breakout continuation if that resistance falls. The risk-reward here is approximately 1 to 2.6 on the first target. So, the critical insight here is that HBAR isn't really a set-and-forget position at these current levels. It's actually a tactical trade that needs specific confirmation signals before you jump in. The 43% year-to-date decline and sustained bearish structure mean, honestly, the burden of proof is on bulls to reclaim control, not on bears to defend their position. So, watch these key levels obsessively. $0.1799 resistance determines breakout potential, while $0.17 support determines continuation or breakdown. RSI behavior at the current 60.57 level. Well, that decides whether momentum sustains or fades. And, volume patterns on any breakout attempt will determine legitimacy versus a fakeout. If this tactical breakdown just gave you a complete trading plan for HBAR, do two things immediately. Subscribe so you catch the follow-up video when one of these scenarios triggers, and drop a comment telling me which play you're watching. Bullish breakout above $0.1799. bearish rejection or support bounce at $0.17. Are you already positioned, sitting in cash, waiting for confirmation? Comment below. I respond to thoughtful analysis, and your insights help shape future content. Listen, I appreciate you staying until the end for the complete technical breakdown. Most traders want simple answers, buy or sell, without understanding the conditional logic that separates profitable trades from losses. You stayed for the actual strategy, which means you're approaching this market with the discipline it demands. Before you leave, I've got another video breaking down 3 Layer 1 blockchains showing similar fundamental technical divergences that are setting up for major moves. If HBAR's setup intrigued you, those opportunities will absolutely interest you. Link is in the description and on your screen right now. Remember, in crypto, the best trades happen when you have defined entry conditions, clear invalidation levels, and predetermined targets. HBAR just gave us all 3. Now we wait for confirmation, and when it comes, we execute without hesitation or second guessing. This is TJ from TJ Crypto World. Stay disciplined, trade the setup, not the narrative, and I'll see you in the next breakdown.